So, I want you to close your eyes for just a second.
Okay, they're close.
When I say the word Phuket, what is the very first image that flashes onto your mental projector? Be honest.
Well, ideally, I'm seeing a quiet, fiery sunset over the Andaman Sea. But realistically, I'm probably picturing the neon chaos of Bangla Road, backpackers on gap years, maybe a questionable street food stall.
Right, exactly. That is the vintage postcard. That is the standard beach destination image we have all held on to for, what, 20 years?
Easily 20 years.
But here is where we need to basically update the software.
Yeah.
If you look at the actual hard data coming out of the island right now, specifically the real estate and investment numbers,
Yeah.
that image is a ghost. It is completely outdated.
Yeah, it's like looking at a photo of a startup founder in their garage and assuming that is still how they operate 10 years later after they've gone public. Phuket has undergone a massive structural shift.
A total transformation.
Right. We aren't just seeing a change in visitor numbers. We are seeing a fundamental change in who is visiting, how long they stay, and crucially for our listeners today, what they are demanding from the physical properties.
And to help us update that mental image, we aren't just scrolling through Instagram or reading travel blogs. We are doing a deep dive into a really comprehensive market analysis from Ocean Worldwide.
And I want to highlight that this isn't some report generated by an algorithm in Silicon Valley or a satellite office up in Bangkok. That is a crucial distinction.
Totally.
Ocean Worldwide is a luxury real estate agency that has been physically on the ground, living and breathing the Phuket market since 2004.
That context matters so much.
Yeah.
2004, that means they have been there through the tsunami, the global financial crisis of 2008, the coups, the pandemic. I mean, they have seen every possible cycle this island could go through.
Exactly. And this data comes directly from the desk of their director, Sandra O'Neill. Over the years, she has literally navigated thousands of families and property investors through this exact market.
And her perspective is vital because she operates at that really interesting intersection of what people say they want and what they actually write checks for.
Yes, there's always a gap there. And that gap is where the real actionable insight lives.
So our mission today with this deep dive is to take this report and figure out how global migration trends, the rise of the digital nomad class, and even, geopolitical friction are reshaping the real estate market in Southeast Asia's most famous island.
At its core, it is really a story about maturation. The Phuket market is growing up.
Let's get straight into the who. The demographic shift. Because looking at this report, the entire board has been rearranged.
It really has. If we were having this conversation 5 or 6 years ago, the visitor pie chart was incredibly simple. It was basically Western Europe and China.
With China being the heavy hitter.
China was the absolute engine. You could build an entire real estate or hospitality business model entirely around Chinese tour buses.
And today,
the engine has sputtered. The Ocean Worldwide report highlights a 33% drop in Chinese visitors. That is a massive chunk of the market that has essentially hit pause.
okay, but a 33% drop sounds catastrophic. If I'm running a hotel or managing a luxury villa and I suddenly lose a third of my customer base, I'm panicking.
In a fragile economy, yes, you absolutely would be. But this is where the resilience of Phuket really shines through. The vacuum left by the Chinese market was almost immediately filled by two specific surging demographics.
Right. The numbers here are wild.
You have Indian travelers, which are up by 28%, and Russian visitors up by 21%.
Those are huge jumps. But here's the operational question I have. Can you just, swap one for the other? Can you take a villa designed for a Chinese tour group, hand the keys to a multi-generational Indian family, and expect it to just work?
Absolutely not. And that is the core friction point Sandra O'Neill's team highlights. It is no longer a one-size-fits-all asset class. You have to culturally customize the property.
Let's drill down into that. What does the Indian market actually require from a physical space that's so different?
The data shows a very strong preference for large family groups. We are talking multi-generational travel here. Grandparents, parents, kids, maybe an aunt or cousin.
Real entourage.
Exactly. So a standard one-bedroom condo or a hotel room with no connecting door is utterly useless to them. They need villas. They need large communal living spaces where everyone can actually be together.
And the report specifically calls out the kitchen as a major deal breaker, right?
The kitchen is the focal point. Unlike some Western tourists who might just eat out for every single meal, these groups often have specific dietary requirements. Maybe it's vegetarian preferences or the need for a halal kitchen setup.
So a microwave and a mini fridge won't cut it.
Not at all. If a property manager just offers a basic kitchenette, they are effectively locking themselves out of that 28% growth sector. These families need to cook.
Okay, so that's the Indian demographic. What about the Russian surge? 21% up. I assume their needs are completely different.
Very different. And this is largely driven by the current geopolitical situation. The Russian demographic, specifically over the last 18 months or so, is intensely focused on long stay capability.
Meaning they are just flying in for a quick weekend beach trip.
Right. They are there to escape the winter, or they are navigating the uncertainty back home. They might be setting up base for 3 to 6 months.
So for them, the whole resort vibe matters way less than the actual infrastructure vibe.
Spot on. If you are staying somewhere for 4 months, you need visa support, which, by the way, is a service Ocean Worldwide actively helps their clients navigate.
That's a huge value add.
It is. You also need high-speed fiber optic internet because you are highly likely to be working remotely. And you need privacy. You aren't there to be seen at the beach club every single day. You are there to live your normal life.
It sounds like the very definition of good service has had to evolve. It's not just about, folding the bath towels into little swans on the bed anymore.
No, not even close. Service now means multilingual support. Can your property management or concierge handle complex queries in Russian? It also means flexible contracts.
Like month-to-month stuff.
Exactly. You need lease structures that actually work for monthly stays, not just nightly rates. It is a much more complex operational model for a landlord to manage.
But looking at this from a macro view, isn't this diversification actually safer in the long run? Relying entirely on China seemed pretty risky in hindsight.
It is the classic investment thesis. You always want a diversified portfolio. Phuket is becoming much less reliant on a single economy.
So if the Chinese market dips, the Indian market rises.
Yes, and if Western Europe slows down due to a recession, the Russian market picks up. It makes the real estate market significantly more resilient to global shocks than it was even 10 years ago.
It's basically a diversified stock portfolio, but built out of concrete and glass.
That's a really great way to put it.
Let's shift gears to the psychographics. The report mentions a massive shift from guests looking for a place to sleep to a place to live. This kind of touches on that long stay trend you just mentioned.
It does. Think about your own behavior when you travel. If you stay in a hotel for 3 nights, you can tolerate a tiny desk or a slightly slow internet connection. You deal with it because you're out exploring all day.
Right, you just need a bed and a shower.
But if you are there for 2 months, those minor inconveniences become absolute deal breakers.
The report emphasizes this phrase, peace of mind. It feels a little abstract. What does that actually look like in practice for a property?
It's surprisingly tangible. It translates directly to security and privacy. The days of the high-end traveler wanting to be right in the middle of the noisy chaos in Patong are fading fast.
They want distance from the noise.
They want a private pool, not a shared one where they have to fight for a sunbed. They want separate living areas so they aren't right on top of their kids while they're trying to work. They want modern safes, solid locks in gated communities. They essentially want to feel like they are in a fortress of relaxation.
Which brings us to the inevitable buzzword. I know we have to discuss it. Bleisure.
I know, it is a terrible word for a very real, very powerful economic phenomenon. Business plus leisure.
The collision of the laptop and the beach. But Ocean Worldwide goes into really specific detail here. It's not just slapping having Wi-Fi on your listing anymore.
No, it's about the strict non-negotiables. 5 years ago, if the Wi-Fi was spotty in a beautiful tropical villa, the guest would probably just shrug and say, well, I should be offline anyway.
The whole disconnect to reconnect mindset.
Exactly. But that sentiment is totally dead for this new demographic. Now, if the Wi-Fi drops, it is an actual crisis, because that guest is probably running a high-stakes Zoom meeting with London or New York in 20 minutes.
So what are the baseline requirements now?
The report highlights that reliable, ultra-high-speed Wi-Fi is just the start. They need dedicated desk spaces. And I mean actual ergonomic setups, not just pulling a stiff dining chair up to a bedroom vanity.
Ocean Worldwide actually positions Phuket as a seriously budding hub for digital nomads.
It is definitely happening. You can see the entire ecosystem building up around them. High-end co-working spaces, cafes with fiber connections, weekly networking events.
And this leads right into a concept in the report called co-living. To me, I hear that, and it just sounds like a rebranded youth hostel. Is it really just a dorm room for grown-ups?
That's the cynic's view for sure. But think of it more like a networked home. It caters to the solo traveler who actually has the budget for luxury. They can easily afford a nice five-star hotel room, but they hate the sheer isolation of being alone in a resort.
Ah, that lost in translation feeling. Being totally alone in a crowd of honeymooners.
Exactly. So co-living offers a completely private, high-end bedroom and bathroom, but it connects to a beautiful communal chef's kitchen and a lounge area.
You get your privacy when you want it.
Right, but you can walk out your door and have artisanal coffee with a tech founder from Berlin or a designer from Tokyo. It's treating community as an actual luxury amenity.
Speaking of amenities, we have to touch on wellness. The report quotes the national tourism slogan, which is, "Healing is the new luxury." Is this just slick marketing fluff, or is it real?
It's brilliant marketing, but it's driving very real construction costs on the ground. If you are building a villa complex today, you aren't just digging a hole for a standard pool and calling it a
You
day.
have to do more.
Much more. You are specifically designating a quiet yoga sala. You are building a gym, but with commercial-grade equipment, not just a couple of dusty dumbbells. You are ensuring there's easy access to organic, farm-to-table food options nearby. Wellness isn't some cute add-on package anymore. It's the baseline expectation.
Okay, so we have new people, new and very specific demands, and much higher expectations for the actual hardware of the property. Let's look at the supply side, because whenever I hear about a massive boom in demand, I immediately worry about a bubble in supply.
And that is the prudent investor mindset you should have.
The data says 1,100 new units entered the market in 2023, and that is projected to hit 1,400 units in 2025. That is a whole lot of concrete being poured. Is there a serious risk of oversupply here?
There is always that risk in real estate, but you have to look at the broader context. Phuket isn't operating in a vacuum. The report makes a very sharp, very illuminating comparison to its regional competitors.
I actually have those numbers right here.
Uh-huh.
This is the battle of the destinations. Looking at average nightly rates, Phuket is sitting at around $120.
Right.
But then you look at Da Nang in Vietnam, $70, Bali is around $85, Okinawa is $95. Phuket is clearly the expensive option in the region.
And that raises the ultimate so what question for any property owner or investor listening. If you are charging $120 a night and your direct competitor in Vietnam is charging $70, you cannot compete on price. You will lose every time. You have to win on value.
But how do you actually justify a $50 premium per night? That's not insignificant to a traveler.
Ocean Worldwide really emphasizes value adds.
Yeah.
You can't just hand over the keys and vanish for a week. You need to include things like free scooter hire. You need a highly curated welcome basket with local goods. And not cheap tourist stuff. Quality items like exotic local fruits or premium spa products.
Gives them an experience.
Yes, offer airport fast-track services so they skip the immigration lines. You basically have to construct a luxury serviced wrapper around the physical property that entirely justifies that premium price tag.
It's all about the perception of value versus the raw cost.
Precisely. And the report explicitly mentions that modern travelers are ruthless deal hunters.
Oh, they are so savvy now. They have 5 tabs open on their browser. They are cross-referencing your listing on Airbnb, Booking.com, and your direct site. And the report specifically warns property owners about hidden fees.
The dreaded cleaning fee that magically appears at the very last second of checkout.
Yes, your $120 suddenly becomes $180, and the guest's mood changes instantly.
It is a massive conversion killer. In a market this intensely competitive, if you try to sneak in a $50 cleaning fee at checkout, the guest just closes the tab and books that cheaper villa in Da Nang. Transparency is the new currency.
Okay, let's talk strictly about the investment side. For the listeners out there thinking, maybe I should buy a slice of paradise for myself, where does the smart money actually go? The report splits buyers into 2 distinct camps, yield versus lifestyle.
This is a classic real estate distinction, but Ocean Worldwide maps it geographically across the island, which is incredibly helpful. If you are a yield-focused buyer, meaning you frankly don't care about staying there yourself, you just want that sweet 8 to 10% return on your investment, you are looking squarely at Patong.
Patong is the engine room for cash flow.
It is. High occupancy, constant turnover, short stays. It's a cash machine. But if you are a lifestyle buyer, someone who wants to actually use the property, maybe retire there part-time in 10 years, you are looking at totally different areas like Kamala, Rawai, or Sharing Talay.
So you basically sacrifice a little bit of your yield for what exactly?
You sacrifice a point or two of yield for significantly better design, way more privacy, and a neighborhood that doesn't feel like you're living inside a nightclub.
Makes sense. But here is the trend that really jumped out at me from the report. The rapid rise of branded residences.
This is a massive, unstoppable global trend that has landed exceptionally hard in Phuket.
We are talking about deep partnerships with huge global hospitality names like Banyan Tree, Amman, or even high-end fashion brands.
Correct.
The stats here are just wild to me. Buyers will pay 15 to 25% more just for the brand name on the front door. Why? Is the paint that much better? Is the foundation stronger?
It basically boils down to the trust premium. Think
Hmm.
about it. If you are an investor sitting thousands of miles away in London or Hong Kong, and you see a shiny new development called Sunset Villas, you don't know that local developer. You don't know if the roof is going to leak in 2 years. You have no idea if the communal pool will turn green because they fired the maintenance staff.
But if you see Banyan Tree residences on the brochure,
You know exactly what you are getting. You know their exact maintenance standards. You know the exact service level your tenants will receive. You are essentially outsourcing all your due diligence and anxiety to the brand's reputation.
and that trust directly translates to speed in the market. The report says these branded units sell 20 to 30% faster than non-branded units.
Which is an incredible velocity for luxury real estate. It proves that in a maturing market, and especially in a foreign market where buyers might feel vulnerable about safety, predictability, and brand recognition, are worth paying a massive premium for.
So to recap the geography of investment, if you want raw yield, go to Patong. If you want lifestyle and aesthetics, look at Laguna and Shering Talay. If you want safety and quick resale speed, buy a branded residence.
That is a highly accurate summary of the current landscape.
But look, none of this matters, right? If the island itself can't handle all this growth, we have to talk about the physical reality of Phuket, the land itself.
This was the statistic that actually made my jaw drop when I first read the report.
Me too, lay it on us.
Land prices in Phuket have increased 7.5 times over the last 20 years.
7.5 times. That is a massive multiple for physical Earth.
And remember, that is just the island-wide average. If you look at specific, highly desirable hotspots like Rawai, land prices have seen a 14 times increase.
14 times. That is practically cryptocurrency level growth, but for dirt.
It is absolutely staggering. And it is driven by the most basic law of economics, simple scarcity. Phuket is an island. They quite literally aren't making any more of it.
And the report points out that local zoning laws are playing a huge role here, too. I feel like people usually complain about strict zoning, but here it seems to be fiercely protecting property values.
Yes, and this is the boring but important part of real estate investing. The local government has very strict height limits in place. You cannot just build massive 80-story skyscrapers right on the beach. There are very strict setback rules regarding how close you can build to the water.
So they are naturally capping the incoming supply.
Exactly. They are actively preventing the island from turning into a dense concrete jungle like some other famous resort cities have become. That firm constraint on supply naturally drives up the value of the existing approved inventory. If you own a beautiful villa with an unobstructed sea view and the government says absolutely no more building in front of you, your asset just became gold.
There is another stability factor mentioned here that I think is totally unique to this market and maybe a bit counterintuitive to Western investors. Yeah. The idea that cash is king.
This is exactly why Phuket often completely defies global economic trends. Think about markets like London, New York, or Sydney. Their real estate markets are almost entirely fueled by debt. It's all mortgages. So when central banks raise interest rates, the whole market shudders. People suddenly can't afford their monthly payments, and you see a wave of forced sales.
But the dynamic in Phuket is different.
Completely different. The vast majority of transactions, especially in the luxury sector that Sandra O'Neill and Ocean Worldwide deal with, are purely cash-based. Foreigners generally cannot just walk into a Thai bank and easily get a local mortgage.
So if interest rates spike in the US or Europe,
The Phuket market barely even flinches. It is deeply insulated from global banking crises because the owners actually own the property outright. There is no bank threatening foreclosure if rates tick up a few percent. It creates a very, very stable floor for prices because you just don't have desperate sellers dumping their assets to cover debts.
that's a fascinating dynamic.
Mm.
It effectively deleverages the entire island's luxury property market. Finally, let's quickly touch on infrastructure. Because you can have the most beautiful villa in the world, but if the road to get there is a pothole dirt track, you're in trouble.
And this is exactly where the government is pouring serious money right now. The airport expansion is huge. More capacity for direct flights means easier access for all those diverse, long-stay tourists we talked about earlier. But it's also about the new expressways being built across the island.
The report specifically mentions that these new roads are turning previously remote areas into prime real estate.
It literally redraws the investment map. If a brand new expressway cuts your driving commute to the international airport from 60 minutes down to 20 minutes, suddenly a plot of land that was considered way too far out is now highly accessible. It unlocks completely new areas for luxury development and spreads the wealth beyond just the traditional West Coast beaches.
So pulling all these threads together,
Yeah.
we started by saying Phuket isn't just a simple beach holiday destination anymore.
No, it has evolved way past that. It is rapidly becoming a sophisticated international residence hub.
We have wildly diverse demographics now, Russians, Indians, highly mobile digital nomads, replacing that old monolithic reliance on the Chinese tour market. We have a massive demand for high-quality, flexible, tech-enabled living spaces over standard, cramped hotel rooms.
And we have a supply side that is naturally constrained by geographical land scarcity and strict zoning, which incredibly protects your value. All of this is supported by a solid cash market foundation that resists a global interest rate shocks.
It really feels like the market has finally graduated. It's not in college anymore, backpacking around. It has a real job and a solid retirement plan.
It's the definition of a mature investment landscape.
Which brings me to a final thought I want to leave you with. We are seeing the massive rise of these branded residences, these ultra-private villas with hotel-grade services, and the bleisure traveler who stays for months at a time instead of days. As remote work becomes a permanent fixture of our global economy, are we actually seeing the slow death of the traditional hotel model?
That is the multi-million-dollar question. Are we moving entirely toward a world of hometels?
Hotels, I kind of like that. Or maybe I hate it. I haven't decided yet. But the line between a home and a hotel is definitely blurring to the point of vanishing.
It is definitely the most important trend to watch over the next decade.
Listen, we covered a lot of ground today, and we threw a ton of percentages and numbers at you. But remember, this deep dive was based on insights directly from the absolute authority on the subject.
The team at Ocean Worldwide, and specifically the insights from their director, Sandra O'Neill.
If you're actually interested in the specifics, whether you want to see what a stunning lifestyle villa in Chengtele actually looks like, or you are curious to crunch the numbers on those branded residence yields we talked about, go directly to the experts who have been living and breathing this market since 2004.
They really are the premier authority on the ground there.
You can find all of this and connect with them at oceanwwp.com. That is oceanwwp.com. Go check it out, see the actual property listings, and read the full market reports for yourself.
It is highly, highly worth a look if you're serious about this market.
Thanks for joining us for this deep dive. We will catch you on the next one.
Take care, everyone.